There is no better setup than this strategy, and it forms every single day. You can quit your job in 90 days and become profitable from this one strategy alone. Now guys, these aren't my words, these are words from ICT himself, the creator of this concept. Now guys, in today's video, I will be going through a full step-by-step breakdown of the ICT silver bullet strategy. I will take you from A to Z so you guys can become masters at the strategy, and I will be simplifying each step down to the core and most important points. So let's get into it. Alright guys, starting off with times and pairs. Now, in this video, I will be focusing on the AM session silver bullet. There is a PM NY session, and there's also a London session silver bullet. However, in today's video, I will be focusing on the AM session silver bullet as it is most accessible for all audiences. As you can see, 10 to 11 AM and 3 to 4 PM is very accessible for people in NYC and for people in London. So, moving on to pairs, Euro USD, GBP USD, as they are dollar correlated, and SPX 500 and NAS 100. So these are the pairs I have backtested and traded this strategy on. You guys should test this for yourself and backtest it on your own pairs and see what works best for you. However, I do recommend stay with these pairs as a baseline. So moving on into the actual strategy. So this is all on the 1 minute time frame, by the way, guys. This whole strategy is going to be on the 1 minute time frame. So simply, before our kill zone, we want to delineate our time zone, our kill zone. I want to look for a liquidity sweep beforehand. So guys, remember this strategy has no bias, so the liquidity sweep could either be buy side or sell side liquidity. As you can see, buy side liquidity up here, sell side liquidity down here. As you can see in this diagram, we have taken liquidity to the upside, we've taken buy side liquidity. From here, I would want to see a market structure shift with displacement. Now guys, what is market structure shift? Market structure shift is a change in trend. As you guys can see, say market is pushing up very aggressively. We're getting higher highs, higher highs, higher highs, lower high, lower high, lower high. You guys get it, we're on an uptrend. However, market then we get this is what we call our market structure shift right here. As you guys can see, we ended up going from higher high, higher high, higher high to lower high, lower low as well. Market is changing in trend. This is our shift in structure. This is what we call our market structure shift. As for displacement, guys, I recommend you guys do wait for the live market examples at the end of the video where I would be able to explain this better for you guys. However, in short terms, displacement is simply market moving with a lot of volume, moving with a lot of strong candles. So as you guys can see, liquidity sweep to the upside, then we get market change in trend with our market structure shift. As you guys can see, the change in momentum, we're getting a lot of upwards momentum, and our market is starting to reverse. This is our market structure shift. So from here, from the displacement leg, we would want to look for a fair value gap or balanced price range. Now, what is a balanced price range? A balanced price range is basically a double fair value gap. Let me draw it for you guys quickly. Alright guys, I hope you enjoyed my drawing right there. As you guys can see, we do have one fair value gap right here, and we do have a second one right here. So this is our double fair value gap, and the part where it overlaps is this zone right here is our balanced price range as it overlaps. The two fair value gaps overlap. That is what makes it a balanced price range. Now, I will explain it in more depth on the live market, so stay tuned guys. So a balanced price range is basically an added confluence, a high probability hack. However, entering off a fair value gap is equally as valid. So a couple tips for risk management on this strategy, guys. Risk 1%. This strategy has an insanely high win rate, so don't really worry about losing. Obviously, there's going to be a few odd times you do lose. However, for the more part, if you are trading this strategy correctly, you should be winning majority of your trades. So risk 1%, as we are going to be pretty in and out of the market pretty quickly. So if you do want to make the strategy worthwhile, risk 1%. As for take profits, now 10 handles to the next draw on liquidity for indices such as NAS 100 and SPX 500, and 15 pips to the next draw on liquidity for forex pairs such as Euro USD and GBP USD. Now guys, we are looking for anything more than 1 to 2 RR. You want to look for 1 to 2 RR minimum. So targets now. Guys, I did say you want to look for a minimum of 15 pips for forex and 10 handles for indices. Now, this does not mean that is a maximum. You guys can make your take profit as big as you'd like, but just bear in mind that market may not always go down to your take profit if you set at 100 pips plus or something. So if you make your take profit reasonable at 30 pips, 40 pips, 50 pips, there should be no problem at all. So place your take profit at opposing liquidity. You could place at previous day highs, previous day lows, equal highs, equal lows. Now guys, if you want to learn more about previous day highs, previous day lows, drawn liquidity, and daily bias in general, make sure you watch my last video where I do cover this very in depth. As for our stop loss, guys, in this scenario, we'd place our stop loss above the swing high as we are looking for sells. If we are looking for buys, stop loss are below the swing low. So from here, guys, I am going to go into real market examples and show you guys on the market how I caught a couple trades using this strategy, and you guys are going to end up realizing how frequently this strategy really does form and how amazing it is. So let's get into it. Now, before I continue with the video, I just want to show you guys an absolutely amazing opportunity for you guys. Now, I will get you funded 100% guaranteed. Now, if you are skeptical, you guys can check out the group, the Telegram group, the first link in the description. You guys can see how many accounts we passed. Here's a 200k account we passed. Here's a client which was so happy that we passed his account. He's not been able to pass a funded challenge in 2 months. He's been wasting a lot of money. However, we got him funded in a couple of minutes. Stop wasting your money on funded accounts, guys. Be smart and get funded 100% guaranteed. Now, if you're skeptical, guys, you'd not paste a single penny until we get you funded. And we have a guarantee for that, guys. If we do not get you funded, we will refund every single penny. And plus, I will give you $1,000 out of my own pocket on top if we do not manage to get you funded. It's absolutely zero risk for you guys. In the worst case scenario, you make $1,000. So what are you waiting for? Go click the first link in the description and send me a message. Alright guys, I'm on EURUSD and I am on the 1 minute time frame. Now guys, firstly, the indicator I do have on is if you search up sessions on your indicators and you click sessions on chart by aurochs.aif, and from there it will come up on your chart. You want to come here, click settings, untick Tokyo and untick London, and come to New York and put in 10 AM to 11 AM. Now from here, click OK, and you should get the same indicator as me, which does showcase the silver bullet each time it happens. So this trade ran about 1 to 2 on the dot, which is amazing. And if this trade happened in the span of, if from my entry it was about 11:04 to 11:26, so about 20 minutes, guys, you could have bagged yourself 2%, which is absolutely amazing. This strategy works like magic. I'm going to break it down for you guys. To start off, I'm going to remove all these drawings right here, just to make it clear for you guys, and I'm going to replay the market now. So we are before our kill zone and we are looking at EURUSD. So firstly, we do not look at daily bias. This strategy does not require any bias at all. So we can look for a liquidity sweep to the downside or the upside. Now, what are the main points of liquidity I see? I see a swing high right here, and I see a swing low right here. Now, I would want to see market take out either direction. So market could take out buy side or sell side. If we do take out liquidity to the upside, we want to start looking for sells, guys. If we take out liquidity to the downside, we want to start to look for buys. If I play market, you can see market clearly takes liquidity to the upside, and we do enter our kill zone. So now I am confirmed that we are looking for sells. So what is my next step? I want to look for a reversal in trend to confirm that market is no longer going to be sweeping liquidity to the upside, and we're going to start to get a reversal here. So I'm going to play out market and see what happens. Now, as you can see, market is playing around. And let me just replay to this point. Market has formed a swing low right here, which I do want to see broken. You guys could have targeted this point as well, which would have been perfectly valid. So I want to see this swing low broken for our market structure shift. As it is, there we go. And as you can see, market clearly breaks this swing low with a body closure, guys. Now, when I said displacement, guys, this is what I mean, guys. As you can see, market is moving with a lot of volume. As you can see, bearish candle, bearish candle, bearish candle, bearish candle. As you can see, a big bearish candle. The body of the candle closes way below the significant low right here, which makes it a valid and a strong market structure shift. All right, guys, now we've got that change in momentum. As you can see, we went from being bullish to now getting that first sign of bearishness, confirming to me that I want to start to look for sells. Now, if I play out the next candle, you can see we do get a wick here and we leave a beautiful fair value gap in the displacement leg. Now, as you can see, I'm going to mark up my fair value gap from the displacement leg, and this is the fair value gap I will take. Now, guys, you could take these other fair value gaps. However, I usually take the first fair value gap after the market structure shift due to us being on a lower time zone, and we can only place trades within our 1 hour kill zone. So I want to get my entry and get out of the market as soon as possible. So from here, I'm going to mark out the 50% mark of my fair value gap, as you guys can see. So I mark out the 50% mark of my fair value gap in order to decrease my drawdown as in most cases, guys, market will come and fill in your 50% zone. So we do not get a balanced price range in this specific trade. However, stay tuned for the next trades, as there definitely will be a balanced price range. Now, from here, it's simple. Simply place your limit, guys, and wait for market to enter into your zone. So I'm going to play market. And if we just wait, as you guys can see, we do get that tap right there. We get that confirmation entry. From here, stop loss above your swing high. And as for take profits, now you could target this low right here, and we are aiming for a minimum of 15 pips. If you just wanted to aim for a minimum of 15 pips, as you can see, this is a 1-to-1, so I would not recommend it. I would recommend aiming for a 1-to-2 at minimum. So if we're aiming for a 1-to-2 right there, we could aim for about 28 pips, which is amazing. So if I do play out the trade now, you guys can see barely in any drawdown first of all, and you can see market just shoots down. Absolutely beautiful. So just like that, I was managed to bag a 1-to-2 at 28 pip trade in the span of about 20 minutes. So just to recap, guys, let me mark it out for you guys as well. Liquidity sweep to the upside, as you guys can see. From here, we've got on our market structure shift right here. So this confirmed that market is changing in trend, so now we can look for sells. And from there, I did get a fair value gap. No balanced price range, however, that is fine. So from there, I marked out the 50% of my fair value gap and entered off that 50%. Placed my stop loss above the swing high and took my profit at next liquidity level. So I could have placed that here, for example. However, I was aiming for a 1-to-2. So you guys can see this trade played out beautifully. So on to the next example. Alright guys, on to the second example on Euro USD. Now I showed you guys a bearish sell trade in the last example. Now this is a buy. So just a quick breakdown of it. As you guys are now familiar with the strategy, I'd hope. This was a nice 1-to-3 trade, 22 pips. Stop loss at 7 pips below the swing low. It was an absolutely amazing trade. We held it from about 10 to about 55. So about 35 minutes. We would manage to catch ourselves 3%, which is absolutely amazing. So let me just delete these drawings off my chart and replay the market now. As you can see, guys, I did have this demand zone outlined. However, this is for a separate setup. However, you could have used it as confluence towards this trade for market to buy upwards. So now I know I'd be looking for market to take out our equal lows right here. So if I play out market, you can see market smashes through here, takes liquidity very clearly, which we do then enter into our kill zone. So from now, I am going to start to look for a change in trend for a market structure shift. So this is a nice point right here. It's a nice significant point on the market, which I'd like to see broken for market to have a change in momentum, for market to have a change in trend. Now, if I do play a market, you guys can see we do get a lot of volume. Market closes above this significant high with a lot of volume. As you guys can see, the body of the candle closes above the significant high. This makes it a valid market structure shift, as we are moving with displacement, as I said, guys. So from here, where is our fair value gap? If you would have said this is the fair value gap, you guys would be wrong. And let me explain. We have candle A, B, and we do not have a candle C for this fair value gap to be valid. Now, if I do play the next candle, you guys can see it is no longer a valid fair value gap. You could enter off this very, very, very tiny fair value gap. However, I would not take it. In this case, that fair value gap was not valid. A lot of you may have got tricked out by this and thought this is the fair value gap. As you guys can see, a gap right here. However, guys, remember, a fair value gap is a gap in between candle A, B, C. As we have no C candle, this fair value gap cannot be valid. So which other fair value gap do I see? Now, it is also quite small. However, it is still valid right here, as you guys can see. Now, if I do long it out and set my limits, as it is quite small itself, I will not be entering off the 50% mark. As for stop loss, below the swing low, as usual. As for take profits, I did see a couple nice zones of liquidity, such as this swing high right here and this high right here. This high was about 15 pips on the dot, and this would have been a great trade in itself to hold for 15 pips, as 15 pips is the minimum. However, I did want to go up to this high right here, and I did not hold all the way up until the demand zone, as market could have formed equal highs right here and then later taking it out using as liquidity for induced area of demand. However, that is a separate topic, guys. If you guys do want to learn about order blocks, I do have 2 videos out on smart money concepts and order blocks, which go through them in full. So if I play out market here and go back on topic, you guys can see we do hit our fair value gap and we do react beautifully on it. We are in about 4 pips of drawdown, however it is minor. So if I do end up playing the market, you guys can see how beautifully this trade really does play out. This strategy is absolutely amazing. And you could have aimed for the demand zone. However, I did not know that at the time. So as you guys can see, you could have got a 1 to 4 for yourself, which would have been quite simple for a lot of you. However, I wanted to play it safe and take profit at this high. So on to the next example. Alright, on to the third and final example on NAS 100. Now, I'm going to run through this a bit quicker as I hope you guys are familiar with the strategy. So it's a simple 3-step strategy, guys, if you have not caught on. So as you guys can see, if I do hop onto the 45-minute, I did have a nice level of liquidity marked out. As you guys can see, it starts from right here. This is a very nice level of liquidity. So if I hop back onto the 1 minute, that was not even needed, by the way, guys. You did not have to hop onto the 45-minute. You could have just used this level of liquidity and seen that market has taken it before our kill zone. So from here, as you guys can see, I'm waiting for our market structure shift, which we do very clearly get. And as you guys can see, it is with clear displacement. As you guys can see, we do get a lot of strong big candles which are moving with a lot of volume. Now I do replay the market to here. What is our first fair value gap after the displacement? So is right here. I would enter off this fair value gap at 50%. So just mark it out for you guys. As you guys can see from here, simply place your order. As we took liquidity to the upside, we are looking for sales. Stop loss above the high. This is quite big actually. I would place my stop loss above this high instead. And where would I target now? There's a nice low right here which you could target. And we are at 1.6, so I will be going for 1.2. As you guys can see. Now, let me replay the market and let me play out the trade. And you guys can see our entry. Our entry is not bad at all. However, it could be better. However, guys, this is trading. I want you guys to be realistic with yourselves. You are not always going to get the best possible entry. So if I do play out the trade, you guys can see we do end up hitting full take profit. Now, while this trade did take a little bit longer, we still ended up walking away profitable. As we stick to our rules, sticking to your rule-based system is so important, guys. As you guys can see, where many people may have panic closed their trade right here and not caught their full take profit, I have, as I've stuck to my rules, which helped me become profitable right here. So that's all in today's video, guys. Thank you guys so much for watching, guys. Make sure you don't forget to check the link in the description for the free Telegram. Thank you so much for watching, and I'll see you guys later.